Hi all, welcome to my channel Satish Vlogs. In this video, I would be explaining the concept of issue of equity shares for cash at par. What is this concept all about? What are the journal entries when the shares are being issued at par for cash? How this transaction is supposed to get reflected in financial statements? All these details I would be explaining in this video. Okay, with this introduction, let's move to the next slide of my PPT. In this slide, there is a diagram which depicts like a cycle. This is nothing but an accounting cycle. What is an accounting cycle? What are the various phases of an accounting cycle? All those details I had already provided in my previous video on accounting cycle. I request the viewers to go through that video before getting into the details of the current video in order to gain better understanding of the current concept. Okay. And also, as mentioned, I would be considering the phases of an accounting cycle to explain my concepts. So as a first phase, which is business transaction, issue of equity shares at par for cash is a business transaction. What is the issue of equity shares? In which circumstances equity shares would be issued? Let me explain you these details. Normally, when a business organization is in need of additional requirement of the cash for its expansion, then in such a case, the business entity would request or raise the funds either by way of equity or debt, right? If it is a equity, which means that the business entity would directly request the or reach out to the outside public and ask them to contribute the money towards the business expansion, right? So whoever the person contributes towards the business expansion, that person would be called as a shareholder, and in return the company would issue equity shares to the extent of the shares which that person has bought, right? And also to the extent of the amount which the person has invested, that person would be having a right towards the share of the net assets to the extent of the amount the person has invested. Okay, which means that the person or the equity shareholder is entitled to have a ownership towards the net assets to the extent of the percentage of the shares which has been invested. Okay, and in return the business entity would propose the dividend and the same would be paid to the shareholders as decided in the annual general meeting. Okay, so with this I hope the business transaction is clear. Now let's move to the next phase of an accounting cycle, which is a journalizing phase. What is this phase all about? For whatever the business transaction for which the journal entries are made or created in this phase. So as mentioned, when the business entity issues the equity shares to the external public, then in such a case the business entity would end up in receiving the money in the form of bank, right? So the bank account is supposed to be debited, right? So to which account it is supposed to be credited? Who is contributing this money? Equity shareholders are contributing this money, right? So this needs to be credited against equity share capital. We consider this equity share capital as a representative personal account or the personal account, because this is something is related to the equity shareholders, and equity shareholders would fall under personal accounts, right? So what is the golden rule for a personal account? Debit the receiver, credit the giver. So in this business transaction, who would be contributing the money? Equity shareholders. So the equity share capital is supposed to be credited. So the entry would be bank account at R2 equity share capital account. Hope this is clear. Now let's move to the third phase of an accounting cycle. What is this phase all about? Which is a ledger creation phase or ledger posting phase. For whatever the generalizing or journal entries were being created as part of generalizing phase, for which the ledger accounts are supposed to be created and the entries are required to be posted in the respective ledger accounts, right? So we have posted or made the journal entries against two accounts. One is the bank account and the other one is the equity share capital account. So these two accounts are supposed to be created as part of ledger creation phase and entries are required to be posted accordingly. Now let's move to the fourth phase of an accounting cycle, which is a trial balance phase. What is this phase all about? Trial balance is nothing but the summary of the balances of the ledger accounts. So the balances against which the ledger accounts are being created, for which the balances are required to be updated in the trial balance. So the balances for the bank account and the equity share capital account are required to be updated in the trial balance. The balance under the debit side in the trial balance should match up with the balance which has been updated under the credit side of the trial balance, because as we have been following double entry system of bookkeeping of accounting while making the journal entries, so the debits should match up with the credits, right? So there shouldn't be any discrepancy in amounts, it should match up. Okay, so with this, let's move to the last phase of an accounting cycle, which is a financial statements phase. What are the critical elements of a financial statements? One is the income statement and the other one is the balance sheet. See, there will not be any posting or this entry doesn't directly impact my income statement, because this, as mentioned, the bank account would be the real account. Okay, and the equity share capital is something related to the personal account. However, my income statement primarily gets impacted only with the nominal accounts, right? So this entry directly hit or impacts my balance sheet. So now directly update the balances for the bank account under the current assets in the asset side of the balance sheet, and the amount for the equity share capital would directly hit my owner's equity, which is under the current liabilities, right? Here owner's equity primarily comprises of equity share capital, preference share capital, reserves and surplus, retained earnings, etc. Okay, so I hope with this with these details the viewers are able to understand what is the concept of issue of equity shares at par for cash, what are the journal entries which get arised out of this concept, how this transaction is supposed to should get reflected in the financial statements, all these details. If the viewers like this video, request you to like it, share it to your friends and subscribe my channel for more videos. Catch you in the next video. Thanks for watching.